Hello guys, my name is Fred Milestone and welcome to my YouTube channel. And today is on a Thursday or it's on a Friday evening. So guys, today I'm going to tell you the reason why Mpesa has failed in other countries. This is the reason why Mpesa has failed in other countries, and this is the reason why Kenya is the capital of Africa. So guys, go and listen to the video that I'm going to show you now, and please don't forget to subscribe and share. Please guys, please.
In Nairobi, paying with bills on your mobile, it's easier than frankly anywhere else. Kenya has become a world leader in the mobile banking revolution, and it's all thanks to the system Mpesa.
This was CNN's Richard Quest highlighting the success of Mpesa in Kenya. 5 years later, Mpesa remarkable success continues in Kenya, with over 30 million active monthly users generating over $1 billion annually in revenue, and more than 80% of the adult population in Kenya using the platform to send and receive money. However, similar platforms launched in other countries have struggled to gain traction. Today, we will explore some of the reasons why Mpesa is a success in Kenya and why it fails in other countries, India being our case study. Stick around to learn how Mpesa was invented, how it works, and how it secures transactions, and much more. Mpesa is a mobile phone-based money transfer service that was invented by a team at Vodafone Group's Kenyan associate, Safaricom, led by Nick Hughes and Suzy Lani. It was launched in Kenya in March 2007 to provide a way for people to transfer money without the need for a bank account.
18 months ago, Vodafone, working with Safaricom, launched our products called Mpesa. Mpesa is a very simple consumer proposition that allows a customer with a prepaid phone to move money between accounts very quickly, very conveniently.
The service quickly became popular, and by 2010, there were over 14 million registered users in Kenya alone.
And we've seen tremendous uptake in the last 18 months. We now have in excess of 4 million customers using the service. We're doing hundreds of thousands of transactions every day.
Interestingly, Mpesa was originally designed to be a way for microfinance institutions to lend money to small businesses. However, it quickly became apparent that the service had much wider applications, and it was adapted to allow for person-to-person money transfers, bill payments, and even the purchase of goods and services. There are conflicting claims about who invented Mpesa. The team at Safaricom, led by Nick Hughes and Suzy Lani, is widely credited with creating and launching the service in 2007.
It was invented by a guy called Nick Hughes. And if you'll pick one guy, the daddy of Mpesa is Nick Hughes, who also incidentally happens to be the chairman for Mkopa.
However, there have been other claims by individuals who say they contributed to the idea. One claim comes from Nyagaka Eniona Uko, who presented a certificate of copyright as evidence dating back to 2012. Uko claimed that he pitched the idea to Safaricom and got a reward from Group CEO Michael Joseph. However, his claims have not been independently verified. There are also claims that Nick Hughes proposed the delivery of financial services over the mobile phone while working at Vodafone in 2003 and received funding from UK's Department for International Development in 2005 of about $1 million to develop the service. Despite the conflicting claims, it is widely acknowledged that the Safaricom team led by Nick Hughes and Suzy Lani was responsible for launching Mpesa and turning it into one of the most successful mobile payment systems in the world. To use Mpesa, customers must register for the service with their mobile phone provider, deposit money into their account at a local agent, and then send money to other Mpesa users by entering the recipient's phone number and the amount they want to send. Money is then sent in the form of a text message. The recipient can then withdraw the money at a local agent or use it to pay bills or buy airtime. Mpesa also offers other financial services such as savings accounts through Mshwari and money market funds, loan services such as Fuliza and Hustler funds, and insurance provided by partner organizations. Mpesa uses a range of security measures to safeguard its financial transaction system. The measures include two-factor authentication, encryption, fraud detection, and user education. One of the key factors that contributed to the success of Mpesa in Kenya is that it addressed a specific need. Many Kenyans, especially in rural areas, lacked access to formal financial services. Mpesa allowed them to send and receive money using their mobile phones without needing a bank account or access to a physical bank branch. Another factor that contributed to the success of Mpesa in Kenya is the partnerships and network effects that were established early on. Vodafone and Safaricom were able to leverage their existing customer bases and networks to promote the platform. They worked with a wide range of partners, including banks, retailers, and utility companies, to expand its reach. Regulatory support has also played a key role in the success of Mpesa in Kenya. The Central Bank of Kenya was supportive of the platform from the beginning and worked with Vodafone and Safaricom to create a regulatory framework that allowed the platform to operate safely and effectively. Finally, cultural and behavioral factors may also play a role in the success of mobile money platforms in different countries. In Kenya, for example, there is a strong tradition of using informal financial networks, such as Hawalas, which may have made it easier for users to adopt a new mobile money platform. Since its introduction in Kenya, Mpesa has expanded to other countries in Africa and beyond. It is now available in countries such as Tanzania, Egypt, India, and Romania. As of 2021, there are over 40 million Mpesa users in Kenya alone, and the service is used to make over 11 billion transactions per year. In spite of its huge success in Kenya, Mpesa still struggles to gain traction in other countries. So why does Mpesa struggle in other countries? India will be our case study since it has the second largest mobile market but has limited access to banking and high usage of cash. India has over 410 million mobile users, yet only 5.5 million users subscribe to Mpesa. First, Mpesa faced regulatory hurdles in India as the country's central bank imposed strict guidelines on mobile payment services. These guidelines required mobile payment companies to have a physical presence in India, which was difficult for Mpesa as it was a foreign company. The company tried to work around this by partnering with an Indian bank, but this did not provide a viable solution. Mpesa was unable to meet the central bank's requirements, which hindered its growth in the Indian market. Secondly, the mobile payment market in India was already saturated with established players such as Paytm, which had a larger market share and user base of over 100 million compared to Mpesa. Mpesa struggled to compete with these established players, who had already established themselves in the Indian market. Paytm, in particular, had a significant market share due to its extensive marketing and advertising campaigns. Mpesa was unable to penetrate the market and establish a foothold due to the competition. Thirdly, the cultural differences between Kenya and India may have contributed to Mpessa's failure in India. In Kenya, Mpesa was successful due to the high level of trust that Kenyans had in mobile payment services. However, in India, many people still prefer cash transactions and have a lower level of trust in mobile payment services. Mpesa was unable to bridge this gap and establish trust among Indian consumers, which impacted its adoption rates. Fourth, it was the lack of awareness among potential users about the service. Mpesa did not invest enough in advertising and marketing the service to the Indian population, which led to low adoption rates. This lack of awareness was compounded by the fact that Mpesa was a foreign company and Indian consumers were not familiar with the brand. As a result, Mpesa failed to generate interest and excitement among Indian consumers, which impacted its growth in the market. Another reason for M-Pesa's failure in India was the lack of localization of the service. M-Pesa was designed for the Kenyan market, and it was not adapted to the Indian market. The service did not cater to the unique needs and preferences of Indian consumers, which impacted its adoption rates. M-Pesa did not offer services that were relevant to the Indian market, such as utility bill payments, which are popular in India. This lack of localization made it difficult for M-Pesa to compete with established players who had localized their services for the Indian market. Lastly, M-Pesa's failure in India can be attributed to limited partnerships. The company did not partner with enough merchants and service providers to make the service attractive to Indian consumers. This limited the range of services that Mpesa could offer, impacted its adoption rates. Additionally, Mpessa's partnerships with Indian banks were limited, which impacted its reach in the market. As a result, Mpesa was unable to gain a significant market share in India. In conclusion, while Mpesa has been a huge success in Kenya, it cannot be easily replicated in other countries. The success of mobile money platforms depends on a complex interplay of factors, including addressing a specific need, building partnerships and network effects, regulatory support, and cultural and behavioral factors. Therefore, companies looking to launch mobile money platforms in other countries should carefully consider these factors before investing in new initiatives. Thank you for watching today's video, and we hope you found it informative. If you have any questions or comments, please leave them below, and don't forget to like and subscribe for more content on economics and finance.